Let's talk to someone who knows markets and technical levels, everything else. VIX, JJ Kinahan, Chief Market Strategist at TD Ameritrade. Sarat Sethi is with us once again. JJ, your thoughts this morning?
Well, I think, Michael's talking about levels, et cetera. I think the biggest problem for most people as they look at this is that there's no end date. People like dates of things that are going to happen, et cetera. If you think about, if you draw the parallel to tariffs last year, there were days where we'd have big down days, et cetera, or big up days based on some news. And I think the biggest thing about that was there was always, well, if this doesn't happen by, like a July 1st or something, here are the consequences. The biggest problem for, I think most investors here is there is no date where you're saying, okay, well, we'll have an end or we'll have improvement by that. Everything's speculation. And I think with that, that's why it's making very difficult to price things. And so, the easiest thing to do when you're not sure what the pricing should be is to sell things, particularly on the back end of people having had, a few very nice years right now. So I think the biggest thing for, the retail investors who are watching at home is to, if you want to, if trading in this market is fine, but really cut your size. And if you're going to use stop orders, et cetera, really spread them out. We are having giant ranges every single day. There's no reason to think that's going to stop in the near term.
Sarat, we spoke to you. We spoke to you earlier, so you don't have to have all new, insightful thoughts. You can summarize what you thought before and just add to that as well. Mike Santoli's here as well. But what do you think, Sarat?
I think what JJ's saying is this uncertainty is just causing this negative euphoria that we've had, in January and December where everything was going up and people were following it. I think the volatility is incredible. The ups and downs are a lot. And for the average investor, to try to time this is just not the right thing to do. So really, this is the time that we've talked about for years where you take that long-term perspective. And I don't know, trying to get that home to a lot of people to say, we go through these things and that's the equity risk premium you have. And trying to chase the bottom is very hard to do. So it's really investing at this point takes patience. And at some point, the markets will reflect the reality that we have. And right now, they're going to overshoot on the downside and really stay within your allocation. And if you do have the capital, add to it over time.
David Bahnsen, founder and CIO at the Bahnsen Group, joins us on the phone. So just talking in strict numbers, David, and they're frightening numbers, obviously, but I don't know, a worst case scenario, there were people that said the market needed to go down 40%. So if we're down 22 already, are we, by definition, closer to a bottom than the top right now? That's another 18% would obviously be very, very painful. But what do you think the real range could be when it's all said and done, David? Even if and assuming it overshoots based on where it should be.
Yeah, of course, the first part is defining what it should be, and that's really difficult to do. It will become easier with hindsight in the future. But I think that 40% would be really extreme for a non-financial crisis. If we have this sort of transitory period of impaired GDP growth, you could certainly see further downside. But regardless of the exact bandwidth, Joe, I'm convinced that we're closer to a bottom than a top. And I think that what the prior guest said is exactly correct, that unfortunately for regular investors, their best defensive play is to wait through it.